Hello again traders, Aud Jpy there from DRFX, Swing Trading Mentoring. Going to be taking a look at a recent trade that was made on the Aud Japanese yen, which provided us with a strong and quick trading gain of 60 pips, as we took advantage of the recent movement within consolidation on the daily chart, as the market provided us with a strong bearish signal to move from resistance and head back to the support boundary of this pennant setup. Now the pennant setup that was formed on the daily chart took the form of the one on the right hand side of this chart here, where the market forms a pennant with a horizontal resistance boundary and an angled support boundary. So what we were going to be doing is taking advantage of one of the movements between these boundaries and capture our trading gain within a 2-day holding period. Now as you can see here, the daily chart provided us with this pennant setup in sync with the one described on the previous chart. Horizontal resistance boundary complemented by an angled support boundary, and the market, as you can see here, started a U-turn at resistance to indicate the movement back down to support, but the first U-turn was fairly weak, and so the market pulled back and then provided us with a much stronger signal to confirm the start of the movement back to support, and of course provide us with a trading opportunity to take advantage of this expected decline. Now, there are actually a couple of interpretations of this signal that provided support for this trade. Now, one of them is the fact that this was actually a type of bear crown setup, where in this case, the market only provided us with a center tip and a right tip. Now, the perfect example or the perfect setup for bear crowns or head and shoulders patterns is where the market provides us with all three of these key elements: a left tip, a center tip, followed by a right tip that indicates the start of the new trend direction. But what you'll find from time to time is that the market can provide the setup without a left tip and just a center tip and a right tip, or it can also provide us with a left tip and a center tip but without a right tip, and it can continue this trend change with just bearish candlestick formations. So instead of a formation in the form of a counter trend line or a consolidation setup to form the right tip, the market can simply be fairly aggressive and provide us with bearish candlestick formations as part of the new trend direction. So this is something that happens from time to time, but the market does not actually provide us with all three elements of the bear crown setup, but they're strong enough and clear enough to indicate the start of a new trend direction. Now, another interpretation is that this U-turn was also both a counter trend line break when we draw the line across the lows of these candles, as well as an evening star. Evening stars are very popular candlestick formations, and as you can see here, the typical example or typical setup for these signals is that the market would initially provide us with a bullish signal, a strong bullish signal, followed by sideways movement with small candles, and then this is followed by a strong bearish candle to complete the U-turn and complete the bearish formation that indicates the start of a bearish movement. Now, given this overall setup and given the likelihood of a continued movement bearish, entry was going to take place at the close of this bear candle with a stop loss placed just above the counter trend line setup and the target set for 100 pips. And as you can see here, at the end of the 2-day holding period, the market did in fact continue the movement bearish in response to the signal, but instead of providing us with a 100 pip target, I had to close the trade at the end of this 2-day holding period for 60 pips, in sync with the rule that I have of closing trades at the end of this 2-day holding period, regardless of the number of pips that the market has provided from the trade. Now, in terms of my live account, this trade represented a trading gain of 2.62%. And even though you see here that the market actually took 4 days to hit the trading target, it was actually 2 days. But what happened was that the signal was given on Thursday. And so what I do is to usually consider Friday and Monday to be the 2 days as part of the 2-day holding period. But of course, what happens is that my FX book includes Saturday and the small number of trading hours on Sunday. But of course, I ignore Saturday and I ignore Sunday whenever the market has provided a signal on a Thursday, and the holding period would be between Friday and Monday. So essentially, it really took just 2 full trading days to actually provide us with this trading gain. Now, this recent trading gain represented another one of the positive trading gains that have been provided so far since the new combined strategies were started in February of this year. 13 trades and only 4 of them being losses to provide us with a very strong rate of return and strong performance so far. Most of the trades have been profitable, with 70% of the short positions being profitable and 60% of our long positions being profitable. And this has been reflected in the 16% rate of return so far in 4.5 months since the start of this new combined approach in February. And so what this means is that the first target of 14% has been hit, and within the next couple of weeks, the next target of 30% is expected to be hit as we aim towards hitting larger targets in the weeks and months ahead. So the overall summary of this trade setup was that the market had formed a pennant consolidation on the daily chart and had recently given us a strong bearish signal indicating a movement back to support. This bearish signal could be interpreted in one of several ways, being an evening star, a counter trend line break, or a type of bear crown head and shoulders pattern. So these complementing interpretation of the signal were confirmation to indicate that the market was very likely to continue the movement back down to support. To protect the trade, a stop loss was placed above the counter trend line, which is generally a good area to place a stop loss, especially if it's a stop loss on the daily chart, where setups and signals and stop loss areas are generally stronger and more likely to protect our trade. And in the case of the trade itself, this represented a 2.6% rate of return on my live account in just 2 days. 13 trades have now been completed since the start of this new approach in February, with just 4 losses. Very impressive. And what this is essentially telling us is that a patient and accurate approach to trading in the currency market is perhaps the best way to enjoy short-term as well as long-term rates of return from this currency market without having to trade every day or even every week. Once we identify the strong signals and the strong setups on the daily chart, on the 4-hour chart, then we can take advantage of them with a lot of confidence, knowing that these signals and setups have a much higher chance of success compared to the volatility of the lower time frames.